Welcome to Trading Nation. I'm Brian Sullivan. Michael Bapis of the Bapis Group of HighTower Advisors. Craig Johnson of Piper Jaffray are your guests today. And gentlemen, let's talk rates. Because call it the great rate debate, Craig, I guess, because people are, and I hate to use this term, but it's true, maybe freaking out over rates. There are some who believe the market volatility is more due to risk parity rebalancing. That's too big of a story to get into. Here's the bottom line. If we go to 3, if we go above 3, can the stock market withstand it, Craig?
Well, Brian, when you look at the shorter term chart we brought in, we can see that we're definitely on our way to go retest 3%. We've had a very strong move in this market. And from my perspective, it's not really the level that matters quite so much. It's how fast you get to those, you move up. We've seen back in 2013 with the taper tantrum. You've seen back in '87. You've seen some situations in the past where when rates move up too quickly, something ultimately doesn't go right in the marketplace. That was portfolio insurance. Now we saw the short volatility funds have a problem. That's what worries me a little bit right now. If you look at the longer term chart, we're reversing a 36-year downtrend in rates. So many investors in this market have not seen a rising rate environment, and we got to take that into consideration, Brian.
But Craig, when you overlay, do you think that stocks can withstand that?
I think stocks can withstand that because ultimately I believe that this secular bull market that we've been in for, since we've been calling for it since August of 2012, will work until you get to a 5 or 6% 10-year bond yield. It's just the speed of moving up too quickly. Something breaks. You never really know what it is at the time, but usually there's a dislocation that occurs.
Yeah, great point.
When you get these losses in...
No, I was going to say history shows that rates and stocks can kind of go together till about 5%. Although, man, we haven't seen 5% since before they wore helmets in football, it feels at this point. Michael Bapis, your view on the 10-year, is that going to kill the stock market rally?
I don't think it will, especially if it methodically rises. I mean, there's so much concern around volatility and short term and all the trading that's going on in equities and fixed income. I just think if it methodically rises, we'll be okay. What does make me nervous if it shoots up. If it shoots up, then we will have some dislocation in the market. But put things in perspective. The 20-year average on the 10-year is like 3.66% roughly, and the 60-70-year average is up around 5-6%. So while this is a short-term view, moving from 140 or 50 where it was last year to almost 3%, it is a big move, but historically speaking, everything reverts back to the mean, and it's not that great of a move. The only issue I see is if it shoots up and there's not a methodical move higher.
Yeah, I mean, certainly the market's shaking, but there's a lot of other stuff with volatility going on in them. They may have been set off by rates, but there's a lot of stuff the last couple of weeks that I think that we're going to uncover over time was the real cause of these 1,000-point drops. Michael Bapis, appreciate it. Craig Johnson, as always, gentlemen, both thank you very much. Two folks who said, guess what? We could survive higher rates. We'll see if they're right. Thanks for watching. I'm Brian Sullivan. Until next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.